Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, and regulatory landscape and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Daniel Wagner, founder, chairman, and CEO of Rezolve AI, and Justin Grooms, president of Bolt. We're here to discuss the age of agentic commerce and how LLM-driven shopping is going to shape the upcoming Black Friday, Cyber Monday season. It's great to have the both of you with us. Welcome to Trade Talks, and Daniel, let's identify this. What is the age of agentic commerce?
So the future of digital channels is going to be sort of split roughly 50-50 between turning up at a website as we know today, and instead of navigating using sort of the clicking and the navigating around the way that we do at the moment, having a conversation with a digital agent that is very sophisticated in its conversational skills and will give you all the information you need in order to make a purchase. That's the first route to engaging. But the second route is that I'm having a conversation with Siri, or I'm having a conversation with Google Assistant, or with ChatGPT, or with one of these other AI agents, and they will send off a programmatic agent to the Hilton website, or to the Macy's website, or to whatever, to interrogate on my behalf via ChatGPT the things I want to get answers to. So for example, today, if I was to say, to ChatGPT, I'm looking to book a holiday in France, can you suggest any hotels? It eventually would send me a link to the hotel, and I'd go off from ChatGPT to that hotel. But the future will be that an agent will go off from ChatGPT, interrogate the hotel's website on my behalf, and say, hey, these are the available rooms at this hotel and that hotel, and I will complete my transaction talking to ChatGPT, for example. Mm-hmm. So those are the two ways. And agentic commerce means that ability for that site to engage with an agent rather than with an individual.
So on your behalf?
On your behalf.
Right. So Justin, how do you think this could potentially impact consumer decisions?
Yeah, I think it's a great question. So, so Bolt has 80 million consumers in our network in the United States. So we see a lot of data on how people behave. What we have seen over the last decade is that when we present choices to consumers in a digestible way, where we sort of bring down the 1 or 2 or 3 best options for them, that consumers actually are more likely to complete a transaction, less likely to cancel that transaction later, and more likely to say that they had a good experience with the merchant. So I think that what Daniel's talking about, bringing in these options to where the consumer is, being able to distill large, complex optionality choices that they might have down to what those real options are that they really could trade off, I think is going to be a big boon for all of us in all sorts of shopping that we do.
Yeah, I mean, it can be quite overwhelming when you get a return on searches and there's 400 hotels.
Yeah.
That might be applicable. And Daniel, you're saying here that this could be a $100 trillion digital economy.
Yeah, look, I think yes, I do, but I think it's fraught with some challenges. And
right.
I think that the challenges are that, first of all, generative AI hallucinates or makes mistakes. And when it makes mistakes on behalf of a retailer, then when I end up getting my product and it's wrong, and I go back to that retailer and say, hey, this isn't the item that I wanted, and the retailer goes, oh, well, an agent came in from OpenAI or ChatGPT or from somewhere else, there's a real complex challenge there that is going to overwhelm many retailers down the road. And what we do at Rezolve AI is try to solve that problem, or we solve that problem rather, by providing an agentic interface that is Gen AI supported. Think of it like a bouncer in front of the warehouse who protects the retailer from rogue agents coming in and making the wrong decisions on behalf of consumers. I mean, the retailer still needs to protect its interests, even if it's not dealing, even if via a third party it's dealing with the customer rather than directly, and it needs to protect that through solutions like ours.
Yeah, I mean, if this is going to be a $100 trillion economy, it has to be done right.
Absolutely.
Yeah,
absolutely.
And Justin, we've spoken to this before on prior panels about digital identity as well, and protecting that, because there is a security issue that has to be addressed as well.
Yeah, I think it's a huge aspect of what folks in the fintech space especially are looking at. What companies like us are looking at is saying the agentic future is coming. I think that you can't bury your head in the sand on this. Amazon came out with some very interesting statistics that over 250 million people have used their Rufus product, their AI agentic solution, more than once. The return and cancellation rates for purchases made through that product are lower than when people are going and searching and buying on their own. So I think that like in their little closed ecosystem, they're seeing some good experiences, but they don't have to worry about this identity issue and payment issue that people have when they go and they shop with multiple retailers or multiple service providers. We're really seeing that people are looking for a solution where they can own their identity and present it during a shopping experience as opposed to sharing it and giving it to retailers like we've seen so much in the past.
Yeah, and it sounds like this infrastructure is really based around what we're seeing with digital assets and leveraging blockchain and so forth.
Yeah.
And I think that's helping this digital economy to thrive and grow as well.
Yeah. Well, so the blockchain is the future of all interactions and transactions. That's our view. We've got a big stake in both democratizing cryptocurrencies as currencies rather than just assets, and we did $1 billion of USDT stablecoin transactions with consumers in Brazil, buying Starbucks coffees, taking cash out of an ATM, using cryptocurrency but getting real from the ATM or paying the merchant in real. So we're a real advocate of the change in infrastructure to the blockchain as a long-term trend. And you're right. I mean, the whole of the blockchains are based on agentic interactions. So we're moving to this new world, and I think that just like with the dot-com boom back 25 years ago, there's a lot of fear, doubt, uncertainty, and lack of knowledge as to how to navigate through that to the best outcome. And I think that we're both sitting here as advocates for how to navigate and provide solutions for it.
Yeah, I mean, the cat's out of the bag with AI. Businesses, in order to be competitive or to even exist, are going to need to understand how to work with it.
Yeah, absolutely. I think that taking businesses that are taking more of a Luddite approach to this and saying that they don't think that consumers will ever use this sort of technology would be well served to look back even a decade ago. We look back 10, 12 years ago where Bolt was. We were constantly getting feedback at that time that there is no way consumers will ever save their payment information, their shipping information online in a central resource. Well, cat's out of the bag on that, right? Like everyone saves their information in multiple places online. The same thing is happening with this agentic shopping. People want more optionality, but they want it presented to them in a way that's digestible as a human. These options have always been out there. There have been for the last couple of years hundreds of different payment methods that people could use. There's hundreds of different locations that you could get a hotel room for your trip to France. But like actually digesting it in a way that we as individuals can understand is what these agentic solutions are really delivering that just wasn't available a couple of years ago, or I would even say a year and a half ago.
Yeah, I mean, Daniel, especially if consumers are driving this demand, you have to react to what consumers are looking for, the kind of experience that they're looking for.
Yeah, look, I think it's actually quite simple. The experience that you have when you're dealing with a fantastic salesperson or representative in a physical store is the expectation that we have that consumers will want when dealing with digital channels. Because when you're talking to somebody in a physical store and they're knowledgeable about the products and they're knowledgeable and they're sensitive to you and your requirements, then you end up buying. And when you go online, there is none of that interaction today. So we're changing that into an interaction, substantially similar, if not in many cases better than the interaction you have in store.
So, in today's model, or what's going to be, an extinct model at some point, where search is pay for play, right?
Yeah.
Or agentic model, or agentic agents going to fall under that model as well?
No, I don't think so. I think that
Which is why I think a lot of people do go to generative AI to do search. So it's not just the same, results coming up.
Yeah, look, I think the real issue is, which I pointed out before, is that if you start with an engagement with an existing interface like ChatGPT, and the retailer doesn't open up their website to accept agentic interaction, then they're not going to get the order, right? They're just not going to get the order. If they open it up without any controls to it, any structure around what's behind it, they're basically letting people into their warehouse to rummage things off the shelves. So there is pitfalls to this, but if the retailer controls the interaction with the agents in the same way that it controls interaction with consumers, then it can survive in this new world and actually thrive.
Yeah. Justin, how do you see LLM-driven shopping? How do you think that's going to shape this upcoming season?
I think that what we're hearing from our consumer groups and our merchants is that there's a lot of optimism about seeing how LLM-based shopping or chat type shopping experiences will work and how people will interact with them become familiar. When we shop for holiday gifts, as we've discussed before, people shop in a different way than when they shop for themselves. You really reduce the decision down to, I'm trying to get my nephew this item, this is my budget, this is when I need it to get there, this is the reciprocal gift that maybe they gave me and I'm trying to balance out. Those are things that people are really comfortable with engaging with the chat type solution and like kind of stepping through those hoops. I think that there's going to be a lot of data that comes. There's going to be a lot of education for consumer that come this holiday season. But still, merchants are really excited about what comes after that. How do we get people to really shop for themselves? The holiday spending is very, very important, but it is a microscopic portion of our total annual spend as people, right? Our total paycheck, everything that we earn. What merchants and other folks are really trying to figure out is how do we tap into that larger amount of funnel of cash that's coming through, so that when people are paying their mortgage payments, they start to think about different solutions. When they're looking for insurance product, they start to think about different solutions. And they can really digest the data in a way, again, that is human understandable. That's what's missing right now.
So, I mean, it could also allow for secondary sales as well. The information that you're putting in, for example, my fiance has every Rutgers product under the sun. So I ask, an agent or an LLM platform, what else can I get for the holidays?
Right.
Oh, by the way, you guys are Rutgers fans. Well, this could also be great for you as well. So is it going to start to turn over multiples, is what it's called in retail?
Well, I think that the fact that the LLM is, well, certainly the generic LLMs are kind of all-knowing. They have visibility into all the social channels and into the internet as it's in itself. Then they have the ability, using the compute power and everything else, to be much more cooperative in providing that kind of relationships between buying something and what might be appropriate to go with it. It's also very helpful to answer questions that would otherwise be difficult to do online. But the real issue is these hallucinations, because this is, you need this kind of oversight to understand that these LLMs aren't reliable enough. Obviously, we've solved it in Rezolve for the solutions that we provide the merchant. But in the generic LLMs, it's rife and it's a big problem. And sometimes you could end up being confused by the answers that you're getting because you don't identify them as being wrong at the outset.
How about the regulatory landscape in the US and having that alignment to continue advancing these technologies and payment rails?
There doesn't seem to be any restriction there from our perspective. I mean, it's quite an open economy for that.
Yeah. I mean, when you're talking about stablecoins and using cryptocurrencies as forms of payment.
Well, I mean, the Genius Act didn't go far enough, in my view, to address the point of using cryptocurrencies in everyday transactions. It didn't address the issues around potential tax and so on, and it was more about the banking infrastructures. And I think it needs to be, extended and enhanced, but it's a great step forward. I mean, prior to that, there was nothing really. There was nothing there at all. Yeah.
So, and Justin, you and I have covered this before, but if that advances, it just opens up, an even larger addressable market.
Yeah, absolutely. I think that, the one thing that we're seeing, though, the pushback that we're seeing right now is now sort of getting the horse in front of the cart and saying, okay, how can we deliver product to consumer where they'll start to create some demand of pulling of, I want to use these different financial products when I'm buying my holiday gifts or when I'm paying my car insurance. If consumers start to have that information presented to them and we see some real traffic in market that, there is demand, this will free up spend, it'll make payments either less expensive or total cost, the total benefit of the payment will be higher overall for the seller. I think then we will see regulators sort of see what consumers need, what merchants need, and step in at that point. I think what's really stopping some adoption is that usability factor for consumers of like, okay, show me how this is not a gimmick. Show me how I can really use this in my daily life.
Yeah.
And of course, existing payment methods are very convenient. They're very easy, tap to pay, and it's something very familiar. But using stable coins and other cryptocurrencies to transact on a daily basis is not that straightforward, or isn't at the moment.
So it sounds like we're trying to connect the dots and build those bridges and integrate it so that the users, so it becomes ubiquitous and a utility at some point.
Correct. Well, the blockchain is a very different infrastructure to the world we live in today in terms of the way in which the infrastructure for payments works, for example. And these bridges between these two need to be more robust and they need to be more usable.
When do you think we it might become more.
Well, we're doing it. We did $1 billion of transactions, through our wallet, but that's a tiny fraction of the total volume of activity in the world today in retail. So, it's starting, but, there's some way to go.
Yeah, certainly is. All right, appreciate your insights. As always, thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.